this is Richard Flax at Moneyfarm with our regular monthly update. Our last video coincided with a period of quite intense market volatility at the start of August. Happily, that didn't persist, and by the end of the month, equity markets were more or less back where they started. It's been another reminder of the value of keeping a long-term focus as much as possible. Turning to the macro picture, in general, concerns about an imminent recession in the US have receded over the last few weeks, on the back of some decent GDP and retail sales figures. At the same time, the latest inflation data has generally been positive in both the US and Europe. That should be enough for us to see interest rate cuts in September. To emphasize the point, Fed Chair Jerome Powell highlighted the shift in focus from inflation to a weakening labour market during his comments at the Jackson Hole Symposium in August. So, as we come back from holidays, what will be the focus of attention going forward? In some respects, it's more of the same. Macroeconomics, government policy, monetary and fiscal, and the outlook for corporate earnings. The question of how much the US economy will slow down from here is still up for debate. So far, consumer spending has held up pretty well, but the labour market is weakening. Outside the US, China has also been a focus of attention. Chinese demand has been consistently weaker than many had expected in recent months. That's had a knock-on effect across a range of industries, from European luxury goods to industrial commodities. While in the UK, Prime Minister Keir Starmer has taken the opportunity to paint a particularly gloomy picture of the UK economy, and particularly the fiscal situation. He and Chancellor Rachel Reeves are undoubtedly setting the stage for some significant tax increases in the October budget, but the underlying message still doesn't inspire much confidence. The good news is really on the inflation front, and it's become less of a topic of discussion as a result. We should see developed market central banks lower interest rates in the coming weeks. It'll take time for that to feed through into economic activity, but it should over time provide some important support for a global economy that has, outside the US, been pretty lackluster. On the corporate side, tech businesses are still very much in focus. Nvidia encapsulated the challenge, producing very strong profit growth in its latest earnings release, but still not enough to satisfy investors in the short term. At the same time, companies like Meta, the social media giant, and Klarna, the financial services business, are increasingly talking about how artificial intelligence is helping to drive efficiencies. We think it may take time for the benefits of AI investments to really show up in corporate earnings more broadly, but the first indications are beginning to appear. Corporate earnings will come into much more focus as we approach the end of the third quarter in a few weeks' time. So it's good to see that the market's fears of early August have largely dissipated. Inflation is improving and policymakers are ready to lower rates. We'll still be focused on the incoming macro data, looking for signs that the US economy in particular is really heading for a benign and supportive soft landing. Thanks for watching, and look forward to speaking to you again soon.